Alright guys, so I hope you're doing fine as always. As requested, in this video we'll have a deeper look at the trading psychology, more specifically the mental aspect of it. So here's something most traders don't want to admit. Most trading failures are not due to flawed market analysis, but rather a lack of psychological discipline. It's not the market that's beating you, it's your own mind. You can memorize every pattern, every indicator, every strategy, but if your mindset collapses under pressure, your account will follow. Emotions usually override any sense of logic. Impulsive decisions often lead to losses. The solution to this is discipline. Remember, a stable mind creates stable results. Today, I will try and show you how to build a mental foundation that consistent traders stand on. You'll have to take control of yourself before you can try and take control of the charts. When we start trading, we obsess over tools, but totally ignore the emotional state we are in. This will sabotage a clean and disciplined execution. How often have we tried to chase the perfect entry and exit point? Looked at the chart for the secret magical indicator? Searching the magical trading timeframes? But none of those things matters if you're trading while anxious, angry, greedy, fearful, or impatient. You are bound to lose. Be completely honest and ask yourself, how many times have you blown a trade, not because your analysis was wrong, but because you couldn't stay disciplined? Most losses are psychological. If you want stable results, you must build a stable mind. Now, let me introduce you to a concept called the inner saboteur. For the record, this isn't just for trading, but this is for anything you do in life. The inner saboteur is these little voices in your head that whispers, what if this was the move and you missed it? Use a bigger position size, you can make the losses back. Don't use a stop loss, price might bounce here and stop you out before the bounce happens. Just open one more trade, you got this. This voice is trying to keep you comfortable and safe. Comfort has never made anyone a better trader. Your goal shouldn't be to silence this voice, as this will be impossible, it will always be there. The goal is to recognize it, so it stops driving your decisions. Your trading behavior is shaped by your beliefs. Limiting beliefs creates self-fulfilling prophecies that hinder your performance without you even realizing it. If deep down you believe things like, I always mess up, I'm not disciplined, the market hates me, I can't take losses, and you keep on repeating these things to yourself, you will start believing them and seeing them as truths. Your actions will naturally prove these beliefs right. That's why it's so important to empower these beliefs with a positive. For example, don't say I always mess up, but say I learn from every experience. Don't say I'm not disciplined, say I trust my process. Don't say the market hates me and counters my trades. Say the market is neutral, my trade didn't fit my criteria. When your beliefs change, your decisions change as well. They become more objective and neutral, which will lead to a change in results as well. I highly recommend that you write some of these beliefs down that you have and think of an empowerment. Then keep repeating them to yourself. Now, fear thrives on uncertainty. Instead of suppressing fear, replace these vague anxieties with clear, factual responses to calm your nervous system. The less you understand, the more your brain fills in the gaps with worst case scenarios. So instead of fighting fear, break it down. Take the thought that scares you and question it. For example, I'll lose everything, not if I manage my risk correctly. Or I'll miss the opportunity. The market offers thousands of opportunities. I will get the next one. I can't handle another loss. Losses are part of the job. Professionals expect them. When you replace vague fears with clear facts, you will be a lot more relaxed, and remember, a calm trader is a sharp trader. Also, here I do recommend that you write your fears down and break it down on how to overcome these fears. And you don't have to do this alone. Ask the people around you, your friends, your family, the community you're in, to help you. This is probably one of the most important topics in this whole video. It's very important to understand that not every emotional state is built for trading. Try and scale your emotional state on a scale from 1 to 10, with 1 to 3 being the danger zone. You're stressed, you're frustrated, you're tired, you're sad. This is where mistakes happen. These emotional states have a high error rate, and you should avoid trading here at all costs. 4 to 6 is a planning zone. You're alert, but you're not locked in. You feel like you stare at the charts, but you don't see anything. You struggle to keep your full attention and notice you're mildly frustrated with it. This stage can be good for analysis and planning, to keep learning and keep testing your strategy, but it's not the state to be in for active trading. You can take paper trades and analyze them after, see where it went wrong or correct, but I don't recommend taking live trades here. Then we have 7 to 10. This is the focused state. You have clarity, you're confident, you have patience, and are relaxed. This is your focused state. This is when you're capable of trading with precision. So before you even open the charts or take a position, ask yourself, where am I on this emotional scale right now? If you're not at 7 or higher, step away, don't trade, wait till you feel better. This will protect your account from your own state of mind. It's important to create predetermined responses to market scenarios to eliminate panic and replace fear with confidence. One of the biggest reasons traders panic because they don't know what they will do once things go wrong and the market goes against them. So create your if-then plan. Here are some examples of what I personally use. If the market moves against me, I close at my predetermined stop. If I miss a trade, I patiently wait for the next setup. If things get volatile, I reduce my risk and stay objective. If I experience losses, I take a break and review my strategy and mindset. Did I make a mistake or was this just bad luck? If I feel overconfident, it's very important I stick strictly to my risk management rules, that I don't go risk more than I should or normally would just because I feel overconfident. Predetermined trades remove emotions. Please keep this in mind, it's so important. When you know how you will react ahead of time, the fear will disappear and confidence will take its place instead. Every trader has a set of emotional triggers, and these can be different for everyone. These are moments that flip your brain into an impulsive mode, causing rapid and often irrational actions. For me, these used to be boredom, FOMO, revenge, and overconfidence. So I got bored, so I took trades just to be in the market, which resulted in overtrading and me giving back all the money I've made to the market. I got FOMO. I saw other people taking trades, I saw price moving and didn't want to wait for my entries because what if it didn't go there and went on without me? When I lost, I instantly opened new positions, trying to make it back, even with bigger margins, on a lot of times without stop loss, resulting in my account getting blown up multiple times. And once I won a few trades, I got overconfident, even borderline arrogant. I thought I had it all figured out and nothing could beat me, resulting in a neglect of risk management, often trading without a stop loss because I had it figured out anyway. The market couldn't hurt me. These triggers are extremely dangerous and you have to identify them for yourself. These triggers make you act fast, but definitely not smart. So I do recommend writing down some where you consistently lose control. Once you see the pattern, you can work on it and break these bad habits. Recognizing your triggers is the first step to breaking destructive patterns. Command statements are powerful mental directives that anchor your brain in discipline. These are not just motivational quotes. These have to be your mental commands to shift your brain into discipline. Be the boss over your own mind. Shift your mindset and reinforce adherence to your trading rules. Integrate this in your daily routine, especially before trading. For example, say things like, I follow my rules, not my urges. I trade data, not feelings. I act slowly, I act precisely according to my strategy. I control the trade does not control me. These short statements anchor you into the mindset of a professional and will strongly improve your trading mindset. So to summarize, it's important you are able to command your own trading future. Mastering the market begins with mastering your mind. Your strategy is only as strong as the mindset you apply it with. So work on your beliefs, question your fears, monitor your emotional level, learn your triggers, and act disciplined. When you can command your mind, you unlock the ability to command your financial future. You have to control your mind and emotions if you want to become a consistent, profitable trader. So to end this video, I recommend to look in the mirror and tell that little voice inside of you that you are now taking over and that you are now the boss. You are now in control of your own mind and own emotions. So that was everything to this video. As always, if there are any questions, please feel free to ask it in the comment section or on the Discord server, and I will catch you guys in the next one. Take care. See ya. Bye bye.